Good morning, traders. This is Chris Buss with Traders Profit Compass with a morning look at markets for Tuesday, September 22nd. Okay, before we dive into the charts, I want to go over something that you may have heard on FinTwit yesterday or in past situations, and that's talk of a hammer reversal. What they're talking about is Japanese candlestick formation that's called a hammer. And in this illustration, it shows you what a hammer is. Initially, there's selling, which drives the candle lower. And then at some point in the day, buyers step in and drive price higher, thus forming a hammer or the beginning of a reversal pattern. Now, when we look at these hammer structures, it doesn't really matter if the candle closes green or marginally red. What the focus is on the long shadow below, and that would mean buyers stepping in at the low and then driving it higher. Now, in the candlestick formation, what usually happens is you're looking for the reversal pattern. This is a reversal stick and indicative of a potential reversal happening. But what you really need to see is the follow-up. Here's a simplified version. You're coming down, you're in a downtrend, and then you get this hammer formation at the bottom, which is followed by a rising set of candlesticks. And here shows an example of it. In a downtrend, make a big low, and then the buyers step in and drive it higher, and then the next candle is higher. And that gives you the 3-bar hammer reversal formation. Now, if you remember back earlier, over the summer, we saw several bearish setups with big bearish engulfing candles. And, we were saying, oh, wow, man, potential reversal. And then those were ultimately foiled because there was no follow-up. It was a one-day kind of event where there was no follow-up selling. So the bearish engulfing candle setup was foiled. So you'll see aggressive traders, step in here, kind of front-running this reversal, assuming that they're going to get it. It may happen, it may not happen, but what they do is they'll step in and then set their stop below the low of this shadow. So if the low is taken out, then they were wrong. So there will be a number of traders that have already, positioned long, kind of front running this anticipated green candle today. So let's look at SPY. If we focus in, you can see the candle here where they drove it down and then in the early morning, and then they bought it up in the afternoon. So here's your hammer reversal candlestick, if you will. And then what the bulls are looking for today is a green confirming candle. So that's that. Well, it remains to be seen. But, everything starts with a single candle, and we'll see if there is, in fact, a reversal. Where do we stand? All the indexes are still on sell signals, daily time frame. Lower highs and lower lows. We are below the 50 and the 20 and the 8, so prices below all these moving averages. What the bulls need to do, and it doesn't need to be today, but what they need to do is, first and foremost, recapture the 50 EMA. and that is at 331.22. So that would be the first level that would be important for bulls to say, we've turned the ship around. We recaptured the 50, and then we move up here to the pivot point at 335, recapture that, and then we're off to the races. Let's look at it at some shorter time frames. Here's the 2 hour, and we haven't looked at this one for a while, but it gives a nice picture of where we're at. Here was the initial drop, consolidation, and then drop yesterday. So what bulls are trying to do is recapture this trend line. A first step would be at 330. We talked about the 50 being at 331, and then there's this downtrend line, which comes in about 333. If they were to break above that, 333, that would bode very well for a longer term, more substantial bounce or potential reversal. And then we've got these marked levels above, each and every level as it's captured would be places for active traders to get long or move their stops up if they got long at lower levels. Ratchet up your stops as we go. Keep your exposure, at a relatively constant level in case they turn it around. And then you can, stay long as these levels are recaptured. Going down to the 30-minute chart, we've got this big gap here between 327 and let's just call it, it's 330.65 right here. So this morning, and I just looked, futures were flat on SPY. So this is a really nice setup for active traders. How come? We've got this downtrend line, coming off this swing high, picking up all these candles. So it's in this candle here yesterday. So we've got a well-defined downtrend line. If price pops above 327, you can get long against it and shoot for a gap fill $3 higher. So that would be a nice trade to start out the morning if things were green. Set yourself up as a long against 327 with a stop just below and see if they can fill the gap or possibly even go higher. Now, a bearish development would be, of course, if they can't get above this level and the downtrend resistance holds price below, then there's a chance of coming back down and retesting this low from yesterday. Qs daily, here we got, it's the reversal candle isn't as textbook as the SPY one because this lower shadow was pretty small. But anyhow, they did reverse it. We're still below the 50, still below this downtrend line. What the bulls need to do is recapture 271, which is where the 50 is, and break this downtrend line to really get something going on the daily time frame. 2 hour chart. Here was that steep falling wedge that we had talked about with bullish divergence here on the RSI and the PPO. The levels overhead are at 268. Then we've got this downtrend line, and then 275 was a key level. So again, Just go level by level. Don't, lock into some big narrative of, whatever. As long as price keeps reclaiming levels, it's bullish, and treat it as such. Here at this 271, which is the 50 EMA on the daily, coinciding with this downtrend line, that would be a potential place for price to run into problems. But if it can get through, then it's got a more open path to 275 and potentially 280. It filled its gap yesterday, so there isn't that concern. I will take this off now. And here we've got a downtrend line on the 30-minute, basically coinciding with the other trend lines on the other time frames. But that shows you where those potential resistance levels may be. Bad day at the office for IWM yesterday, as resurging COVID fears got back into that back to normal trade. We saw a lot of stocks down 3, 4, 5% in the industrials, and all those cyclical names that had done well in the prior days. Here we've got the gap between 150 and 153. If price can move up here and break above 150, that's a long. If you're nimble, you can be long against this 47.50 and see if you get a push up to 150 and a possible breakout. That gives you a pretty tight stop, for a reversal this morning. But if you can anchor in here, and I looked, IWM is basically flat. So I think it would give you an opportunity to get in near 147.5 and get long, and then of course with a stop just below if price rolls over. And if it does, and especially if it loses the low here, whatever it was, 146, then we're coming back to this 145 where we've got a $3 gap to fill. 30-minute chart shows it a little bit more clearly, the big gap above. You got this 148 resistance at the prior low. If it can pop that, then it's got a pretty easy path to 150 if it's going to be a big green day. But if not, like we said, coming back to 145. Gold took a beating yesterday, was down about 2%, but it was down a lot more than that early in the day, with dollar strength being a headwind. Now there's a gap to fill between 180 and 183. If you're nimble and you see that, price jump into the gap, if you're nimble, you can, jump in long and see if we can get a lift back to 183. But like I said, we did that blog post last week, not bearish on gold, but with dollar positioning being almost max short, we were looking for a squeeze on the dollar higher. We started getting that. So if that persists, that's going to be a headwind for gold, and I'd expect it to come back into the low 70s if those dollar bears continue to get squeezed out. So that's it on gold. Here's the miners, dropped out of this nice triangle. That doesn't look like much, but that's 4%. And now there's not a lot stopping it from coming down to this 38, 37 area. So I'm steering clear of the miners um, with gold having its posture the way it is, and may even look to, set up a short on an individual name here and there if gold weakness persists. Let's run through the FANG names real quick and then we'll wrap it up. Facebook didn't bounce as hard as a lot of the other names. It's still inside this gap. If you got to push back up here, 255 would be resistance, and then this downtrend line. But the Qs seem to be resurgent. We showed those trend lines and bullish divergences on the Qs. Even though Facebook remains weak, maybe it's not time to, initiate anything. Still got a lot of work to do to the upside. If it were to break above this 249, you could get long against the this gap level and see if you can get a push up to 255, 257, somewhere in there. That would be a nice trade if you're, active and nimble. But any kind of rollover back into 249 would be pretty bearish. Apple has been resurgent up here to its downtrend resistance. I did look in the pre-market. Looked like it was in the 111, 112 area. So that could get some traction to the upside, above 110 and above this falling wedge. A pop of 113 could take it to 118. There would be some sizable resistance at 118. We'll just have to play that one by ear. Same thing with Amazon. I looked in the pre-market was around 3,000. It's got to break that level and then come up and fill the rest of this gap up to 3052. And there should be some decent resistance there at 3052. But if it can get through that, then all these prior levels come back into play. Roughly $50 in $50 increments. Here's 3,100, 3,150, 3,200, etc. So just like in the other stocks, each successive level that's recaptured is a place you can either get long or roll up your strikes and your stops to the next level and ride it as far as you can. Microsoft, I would think a break above 205 would be a nice long, breaking above this wedge, and then you've got each successive swing high as resistance. 210, 213, 218, etc. So we'll see how far the bounce can take us. Google, now this is the daily chart. If you were looking to get long Google, this is actually a pretty nice setup from the standpoint of we had a 38% fib retrace with a tag of the 200. I mean, if this is it, if this was the corrective dip and they're going to reverse it now, what better place to get long than against the 200 after a 38% pullback? So if you're looking for a long and you like Google, that's a pretty objective location in my book to get long against the 200. You got a pretty tight stop there. You're right at a key support level at 1425. If you want to go long, that's certainly an objective place to give it a try. And then on the bearish side, if there happens to be, if that fails and the 200 fails, then of course there's more pain ahead once it goes below the 200 EMA. Netflix had a great day yesterday, staging this reversal. Just as we've talked about, if you're long, stay long, move up your stops. Your next target is 495, then 505, then 520. Strong bounce, $20. That's a nice, that was a nice trade to get in, and just let it work its way up. It's broken above this downtrend channel, and now it's just how far will it go. Tesla, battery day today, doesn't start till after the market close. Musk had a couple tweets last night, and it looked like they knocked it down $15 or so, but still strong, still in an uptrend, still above its daily trend line, so all systems go for Tesla bulls. Wanted to revisit this Psi play, SCPL. We had gotten long, and it never got hit at all in the recent turbulence. So that's been performing well, and we're right here at the moment of truth at 16. If price can take out 16, we could be off to the races, especially if the Qs continue their bounce. And if we do clear 16, that would be a great place to move up your stops to just below, because once it breaks out, as we've seen before, you don't want it to come back below. So that would be a place to move your stop up to just below 16 if in fact we get the breakout. I just wanted to show you one other swing trade setup you might be interested in, and that's on McDonald's. We had this prior all-time high here at 215 back in February, and it's climbed its way all the way back, recently broke out, got up to 225, and with this recent turbulence is now back testing 215 from above. You can see the 20 EMA there in blue. So this sets up as an objective long. You got the breakout, and now we get the back test. So if you wanted a long and you liked McDonald's, I like it here against the prior breakout 215, with a stop just below, and then look for it to continue the trend or hold its breakout. Let's put it that way. As long as it holds the breakout, you're fine. But if it, of course, drops below 215, 214 and a half, then it's coming back to the 50, down around 207. And there's probably, other stuff going on in the market that would be dragging it down, either more COVID or general market conditions just being soft. So that's a quick run through. Today, it's all about follow through for the bulls. There is overhead resistance near. We still are on sell signals on the longer time frames. On the 2-hour and the daily time frames, there's still sell signals. But the bulls have a nice hammer working. And so today, if they can print a nice green candle, the bigger the better, then we may have a more sustained bull reversal on our hands that we need to account for and participate in, especially for active, nimble traders that are looking to do some things intraday or over short time frames. Also, keep an eye on gold and the US dollar. Kind of feeds into everything. That dollar strength is going to be a headwind to commodities in general. The energy shares got completely destroyed yesterday because oil was down, due in part to the COVID concerns, demand being soft and a stronger dollar. So keep those things in mind. We've got Powell and Mnuchin on Capitol Hill today. I'm sure they'll be doing their best to talk up what they're doing and be as bullish as possible. I can't imagine them saying anything too different than they said, last week at the FOMC meeting that didn't turn out so great, but you never know. They always got something cooking. So we'll see if their testimony has any effect on markets whatsoever. Okay. If you like the content, please hit the like button and subscribe and leave me a few comments below. If you've got suggestions or any ideas you can offer on how to make these videos more productive and timely for you, I'd certainly love to hear that. Jump over in the show notes if you're new to the channel and register for all my content so you can get that delivered each and every morning. And also visit the blog site where you'll find a lot of helpful articles and topics for aspiring traders at all levels. So with that, I hope you have a good trading day. I'll touch base midday, especially if I see anything. Have a good trading day. And this has been Chris Buss with Traders Profit Compass. Talk to you next time.